Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Overnight, the Australian dollar gained bullish traction and triggered mainly by reports that the US Treasury Secretary Mnuchin is planning to meet with China in 2 weeks. It was revealed that the US government was proposing another round of trade talks with Beijing to avoid further escalation in Donald Trump's trade wars with China. Senior officials led by Treasury Secretary Mnuchin recently extended the invitation to counterparties in China. If agreed, then the talks are likely to take place in Washington. It is a positive thing, Larry Kudlow, director of Trump's National Economic Council, who confirmed the report. We are now communicating right now, and you could say the communications have picked up a slight notch or two. Back home today at 11:30, we do have the release of the ABS employment number. It is forecasted that the number will come in around positive of 16.5 thousand, with the employment rate holding at 5.3%. In the technical outlook, I still view the market towards 71.70 to 72.10 as a sell zone. Overall, I do expect to see the market drop away from that region and look towards 71.30 with a downside objective of 70.60 with a broader outlook holding to 69.40.80. It is a little concerning that the dollar index is broken down further last night. Now, a break beneath 94.50 would give concerns that a further bearish outlook for the US dollar, and this in turn could see a rally beyond 116.75 and on towards 117.55.65. Before that said, though, there was rumour overnight that the ECB intended to lower growth projections at tonight's meeting. The alleged report said in some detail that the reasoning is due to a weaker global demand and growing downside risks. Although the market took the news relatively well, the market may still react to a greater negative response if the ECB President Draghi confirms the reports this evening. This in turn could strike a more dovish tone, bearish towards the EU's growth prospects and pushing back expectations for when the ECB will start to look towards tightening or raising interest rates. As I mentioned, I still hold the view that 116.75 to 117.5 is a sell zone. The MACD does support this, but looking at the RSI could give one more test towards its top side, so be on your guard if you are looking to shorten the market. A break beneath 115.20 would give further scope to the downside and look towards the region of 114.50.55. Looking towards dollar yen, as feared, I felt the market may find a bit of a struggle towards a 111.80.90, and as you can see, was quite the case. Nevertheless, the market is still slightly indecisive in direction. A break beneath the support of 110.75 would give further scope to 110.05.25 and down to 109.40. Any advances, I still expect to see the 111.80.90 cap in dollar yen in the interim. The pound didn't really travel anywhere overnight, as you can see from the long-legged doji. It just looked towards the top side of the range. Now, previously it was at 130.86. Overnight was at 130.80. Although the market is still holding above 130 and looking possibly for a further test up, we do have tonight the Bank of England's rate decision. It is expected that Mark Carney may hold some surprises as the Brexit is now coming closer to the end of its divorce as looking of March 2019. The strategy, though, is still to place or hold shorts unless we get a break above 130.90. Not quite close there yet, 86 being the previous high. If we do see a rejection from 90, then that would see a fall towards the region of 129.5. It is viewed a break beneath there would give further scope to the downside to 128. Although I don't have a view on gold, the market did find some support towards the 90 level and now rebounds towards the target of 1,211.12. It is assessed, though, a break above there could give further scope to the upside. Now, as you can see from this technical point, is the MACD hasn't broken down, but the market is still consolidating. I still hold a neutral view. I don't have a very, very strong view at the moment due to the fact that the marriage between the RSI and the MACD isn't quite there. Nevertheless, A break above 12 could give us a rally to 20. So if you are long, do keep that in mind. And rounding off with oil, well, the market took another stab. As you can see from the last 3 attempts going back to June and then recently in August and now, is that 71 cent is pretty much a tough level to break. If we find this level is a rejection, like before, we fell back towards 66 the first time, close to it the second time, this could be a repeat. I would like to say that the market has found a top for now, but just be on your guard, is that we need confirmation. But the break of the candle of around 68.60 could be the point to support the further downside move. Then therefore would look towards the $67 trigger level. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the rest of the day that's ahead.